at the right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines today. U.S. President Donald Trump has warned that he will increase tariffs on China if President Xi Jinping skips the upcoming G20 summit. Asian markets, as a result, are off to a mixed start. JP Infratech's resolution hit another roadblock after majority of lenders voted against NBCC's bid to acquire the debt-laden company. Divan Housing Finance has completed the sale of its 9.15% stake in Aadhar Housing Finance to Blackstone's arm, thereby securing the cash it needs to repay its liabilities. Sterlite Technologies will be in focus today after promoters Twin Star Holdings released the entire pledge of 52% shares as per the terms of agreement with the lenders. And the Ministry of Corporate Affairs seeks a 5-year ban on Deloitte Haskins & Sells and BSR Associates, the former and current auditors of IL&FS Financial Services, for allegedly colluding with the management in dubious lending practices. Let's have a look at what went down on Wall Street. Benchmark indices gained for the 5th day in a row, led by auto stocks and chip makers. However, sentiment was restricted as indices ended off the day's highs. Investors are now looking for signs of a cessation of trade hostility between the US and China. Renita Young of Bloomberg News brings you the complete wrap of Monday's session on Wall Street.
U.S. stocks joined in a global stock rally on Monday, with the S&P 500 ending its 5th straight day higher, with chip makers and car makers leading that charge. Now, this all happened as U.S. President Donald Trump decided to suspend Mexico tariffs. And it also happened as stocks got a little bit of a boost from major takeover deals. One of those takeovers was within United Technologies, which said it will buy Raytheon to create an aerospace and defense giant. And both shares seemingly shrugged off U.S. President Donald Trump's criticism of the deal very early on in the trading day. Another deal involved Salesforce, which will buy Tableau software, in an all-share deal valued at about $15.3 billion. More interesting news happened with Prevention Bio, which more than doubled and at some point during the trading day actually tripled after a study showed its immunotherapy delays diabetes in high-risk patients by at least 2 years. And a sector to watch will be the video gaming industry. The E3 video game conference is happening in Los Angeles this week, and that'll give a little bit more of a view into what's happening in that $138 billion industry. So you may want to look out for any kinds of company announcements. Meanwhile, treasuries were sliding and the U.S. dollar was a little bit higher versus major currency competitors. This included the pound, which took a little bit of a dive after the UK reported very disappointing data earlier on in the trading session. And WTI ended lower. Gold was also lower and it actually saw its lowest in about 2 months. No surprise there, though, that gold is lower because it's a safe haven, and we saw a very risk-on sentiment happening on Monday. And that's a look at your Monday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's also take a check of the Asian markets. Joining us live from Hong Kong is Sophie Kamruddin. Morning, Sophie. What are the cues that you're picking up and what are you focusing on today?
Well, the mood has turned slightly more risk-on, with modest gains seen across the region, while regional bonds are trading steady and oil just edging higher, but not too far off 3-month lows. And the dollar has resumed gains this Asia session, set to snap a 3-day drop. And I want to highlight Australian equities, which are playing catch-up after the long weekend, with the ASX 200 adding about 1.2% this morning. And Citi reckons there is room to keep going, with the possibility of another rate cut from the RBA and improved attitudes towards the Australian housing market. Now, over in Seoul, the Kospi is fluctuating after a 3-day gain. We have Samsung and Hyundai Motor among the biggest drags there as investors digest a poor set of export data, but the Kospi now looking little changed. And Japanese stocks have reversed earlier losses, with electronics makers and banks gaining ground. And auto players are also among the better performers in Tokyo, even amid local reports that the U.S. is pushing to include more products under the sensitive auto parts list from Japan that attract tariffs. Now, here in Hong Kong, the benchmark is extending gains at a 6-month high, but Geely Auto is a clear outlier, sliding after posting a 27% drop in May vehicle sales. Now, over in Shanghai, we are seeing the index build on Monday's gain, up about 1/3% this morning. Back to you.
Thanks so much for that, Sophie. Well, updates for you on the ongoing spat between the U.S. and China. U.S. President Donald Trump has warned that he will raise tariffs on $300 billion worth of Chinese goods if Chinese President Xi Jinping skips the upcoming G20 summit in Japan. Trade talks have hit an impasse after Trump accused China of reneging on provisions of a tentative agreement made in the earlier round of talks. Jody Schneider of Bloomberg News brings you the latest in this report.
The idea was that they would meet on the sidelines of the G20. There's no real scheduled diplomatic meeting, but President Trump now seems to be almost sort of threatening, or he is threatening, that if that meeting doesn't occur, and again, it's unclear what sort of meeting he wants, that he would raise the tariffs against China on these $300 billion worth of goods, where already there are tariffs. And the tariffs have obviously been raised in recent months. So this does appear to be a bit of another strategic move by President Trump. He likes to threaten and then try to get something he wants, and then if he gets somewhat there, then he can take that threat off or delay that threat, as we just saw with the Mexican tariffs, obviously, where he came up with the threat, and then when Mexico said they would do what they'd already agreed to do, he went back and said, okay, he wouldn't impose the tariffs. So we'll see here, but this appears to be a move that he would like to be more of a meeting than has already been scheduled. So at this point, it looks strategic. It looks like he is trying to push on those tariffs. Again, there's already been a hike in the tariffs, and we're starting to see economic effects from that. We saw at the G20, the finance ministers meeting last weekend in Japan, concern about possible slowdowns to global growth as a result of the increased tariffs and the trade tensions.
Jody, are we seeing any indications at all of a potential thaw with China as we look ahead to the G20?
Not necessarily. At this point, there really are no talks scheduled. There haven't been any talks in weeks. So it really doesn't look like either side is moving at this point. President Trump continues to make the case that China wants a deal. He says nice things about Xi Jinping. He basically said, again, he's a great guy, and it's a great country, but the U.S. is better. Those were essentially his words when he made this latest round of threats about increasing tariffs. So, but there doesn't appear to be any serious moves. No trade talks are scheduled moving forward.
All right. On that note, let's turn to Agam Vakil, who's here to tell you all about the day's trade and what's happening in the futures and options space. Agam, well, how do you think it's going to pan out today?
Well, Alex, honestly, we're expecting a little more sideways movement, and it's something that's now going to be a possibility because we have a lack of triggers of late in the next couple of weeks. We don't have too much to go for. And because of that, we've seen some variables which have moved forth, and that's the reason. But let me start with the SGX Nifty. We've seen, well, marginal moves here. And as far as the day's trade yesterday is concerned, we've seen 0.5% gains, but it wasn't as much for the broader market indices. Neither was it for the banking index. However, the PSU banking index was under pressure, and that was largely on account of, well, many concerns coming through on account in the NBFC space. But moving on to your ADRs right now, Tata Motors is showing severe weakness. Besides that, not too much to speak for. And among the other set of ADRs, we have gains in Infosys and less than 1% gains for Vedanta and Dr. Reddy's. Coming down to your FII flows, again, very small numbers, nothing too much to speak for, but 216 odd crores coming in from FII. Stable and DI is also buying in stock worth 171 odd crores on a net basis. Very, very small numbers on a net basis. But moving on to your contributors, the IT companies did well yesterday. On the other hand, we did see more weakness in the HDFC Twins and Kotak Mahindra Bank. Futures and options is where we're seeing a little more consolidation build out. So we are seeing, well, nearly just about 2% increase in open interest for the Nifty futures, and the bank Nifty futures also seeing about 1.5% increase in OI. Again, when it comes to open interest distribution, we're looking at, if you disregard the 12,500 mark, we're looking at a 500-point range between 12,000 and 11,500. Even in terms of change in OI, should come up for you on screen. A little more writing around the 11,800 and 900 puts. Keep an eye on these levels. Well, the VIX just rose less than 1%, still below the mark of 15. Not much has changed there, and we haven't seen as much change in the Nifty put call ratio either, at around 1.36. And when it comes to stocks in the F&O band, we have the same: Diwan Housing Finance, IDBI Bank, and PC Jeweler. And we have Reliance Capital, which is new in the F&O band, so you will not be able to short, or for that matter, buy the stock and keep this position. It can only be done on an intraday basis. Besides that, we are watching out for Bata India moving from strength to strength. A lot of longs building there. On the other hand, Gen Irrigation under severe pressure. A lot of shorts there. In terms of stocks which are seeing unwinding, we have the likes of United Breweries, Just Dial, and Amara Raja Batteries. Again, Alex, it's going to be stock-specific markets where we're not expecting too much movement in the benchmarks.
All right, thanks so much for that, Agam. Let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with the yuan, which is under pressure again as Korean exports in the first 10 days of the month match the weakness we've seen all year. Outgoing shipments were down more than 16%, while chip deliveries, get this, collapsed almost 31%. Exports in the whole of May were down 9%, and initial readings suggest June will not be any better. To the United States now, it says it has, quote, grave concerns about a new bill in Hong Kong that would ease the extradition of people to mainland China. The State Department says it could further undermine the city's freedoms and damage the business environment. Hundreds of thousands of people rallied on Sunday against the proposal in what was Hong Kong's biggest protest since its return to China in 1997. The race to become the next UK Prime Minister has formally kicked off, and a record 10, count them 10, British Conservatives are fighting for the chance to lead their party and the country. Now, over the next 2 weeks, 300 Tory politicians will narrow down the field to two. Then 160,000 party members will vote for the next leader. Boris Johnson is leading the pack with a pledge to push through Brexit with or without a deal. Japanese Prime Minister Shinzo Abe ruled out calling an early election, this according to Sankei newspaper. That would end speculation of what had been billed as a possible double election, with Abe calling a snap vote at the same time as the scheduled upper house election next month. Now, the ruling LDP is under pressure ahead of an unpopular sales tax hike aimed at helping to ease Japan's massive debt load. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
On to oil now. The Organization of Petroleum Exporting Countries will keep oil prices in the $65 to $70 per barrel range in the second half of the year. That is according to Feridun Fisharki of FGE. Speaking to Bloomberg Television earlier in the day, Fisharki spoke about where oil prices are headed. Listen in.
The economic fears, China, U.S. tensions, which actually have nothing to do with the oil business, but they are creating a sympathy price downwards. And oil prices are mindlessly following the equities. So this is definitely just sympathy. There's nothing real to it. People worry about whether OPEC and non-OPEC can get together and not or not. whether there will be a meeting and whether there will be discord. So that is also fear. But there is something real in all these things. The demand for oil has fallen a lot. Maybe 400,000 barrels per day lower than we expected. So that part is real. The other two are imaginary. OPEC is totally able to pull together this group, and with the help of the Saudis, they can keep it in the $65 to $70 second half of the year.
The question is whether Trump wants it at that price, because the last time Trump intervened and asked OPEC to bring down the prices, they did.
Yes, but we understand the Trump ceiling is $70. We also understand that Mr. Putin's ceiling is 60 to 65. So where the prices are at the moment seems to meet everybody's ceiling. And so also lower oil prices mean that people are scared of getting out of the deal. All of the Russian complaints that I want to go on my own and now will be subdued when you have a fear of prices dropping another $5, $10 a barrel. And then lower prices also stimulate demand. So in a way, this, where the prices have come down, may be in a situation which helps everybody.
Feridun, who calls the shots in OPEC? I mean, it's so dysfunctional right now, and some say the Russians are actually the ones calling the shots.
Well, the shots are called by the Saudis and backed by the Russians. These two are now the king and queen of OPEC and non-OPEC. So they are the ones which call the shots. But, you know, we cannot call OPEC dysfunctional, because if there was no OPEC, the prices could go $80, $90 and come back to 40. The volatility would be much worse. We all need OPEC to keep a reasonable band. Even if it fails to do it every time, it still gives us a band that we can function.
Feridun, Rish in Hong Kong. Now, tell me, we've been hearing a lot of perhaps a bit of antipathy, a bit of a fallout between Riyadh and Moscow on oil. What can you tell us about that? And are rumors of this or the actuality of this greatly exaggerated?
No, the rumors are not exaggerated. We have this situation. In Russia, of course, the foreigner call is Mr. Putin. But when you have President of Rosneft writes a letter to Putin and says, please let us get out of this deal, of course, you know, you don't have to write to Mr. Putin. You can just tell him. But all of these things are optics to tell the rest of us that the Russians are not happy with this deal. But they were not happy when the prices were over $70. Now that prices are $60, I think everybody would fear that if I pull out, repercussions would be serious. So my guess is that after some complaining, the Russians will go along and everything will be rolled over. But please remember, even if the Russians don't play, the number of the contribution is small. The Saudis can make it up in 5 minutes. The whole idea is to do it in such a way that the optics are good. So even if they don't want to do it, if they do it softly and they produce more, OPEC can live with it and Saudis can compensate.
All right, there you have it. That's how the dynamics of the OPEC are likely to play out. But for now, let's turn to what's going to be buzzing in trade today. Mishika Parak is joining in to tell you all about the stocks in news. Mishika, good morning. What's on your list today?
Good morning, Alex. There are lots of stocks buzzing the markets today. The first one being Sterlite Technologies, as its promoter Twinstar Overseas released entire pledge of 21 crore shares, which is 52%, with immediate effect. Well, the pledge has been released earlier than expected. The pledge was released as per terms of facility agreement with the lenders, and the pledge was a collateral for loan taken by Volcano Investment Cyprus to fund the delisting of Vedanta Resources PLC from the London Stock Exchange. Now, this comes right after questions were raised regarding promoters' pledged shares in a conference call after Sterlite Technologies announced its fourth quarter earnings. Then we have DHFL. They've completed sale of entire stake, which is 9% in Aadhar Housing Finance, to Blackstone's arm. It has paid the interest and principal on certain debt instruments that was due on Monday and completed the stake sale. Now, DHFL paid 10 crores in interest for 4 non-convertible debentures and principal of 35 crores on one of them. It said in a filing on Monday, exchange filing. The payment comes after 2 major credit agencies, ICRA and CRISIL, categorized the company's commercial paper at default levels for missing bond payments last week. Aditya Birla Sun Life Mutual Fund sold 68 lakh shares of India Cements on June 6th and reduced its stake from 7.3% to 5.1%. Then Parag Milk launches farm-to-home premium milk brand Pride of Cows in Singapore. It will be airlifting the milk from its dairy farm located in Manchar near Pune to Singapore. Then we have big news on Indiabulls housing finance. A plea was filed in the Supreme Court on Monday seeking legal action against IHFL for siphoning off 98,000 crore rupees of public money. The company has refuted the allegation, terming it as bizarre and made by a racket of blackmailers. The total loan book size of IHFL is about 90,000 crores, so the said allegation does not make sense. And the company also alleged that the writ petition has been filed at a time when it is in the process of getting a regulatory approval of merging itself with Lakshmi Vilas Bank. Lastly, let's look at the important bulk deal. Motilal Oswal Mutual Fund acquired 16.6 lakh shares of Vaibhav Global, and the seller is the promoter.
All right, thanks so much for that, Mishika. Now, if you're planning to go to space in the near future, you better start saving up now. NASA has announced on Friday that its side of the International Space Station is open for business, but it won't come cheap. Daily access to the life support system and toilet will cost an amateur astronaut $11,250 per day. Add on an extra $22,500 a day for food and air. Well, all of that adds up to a nightly tab of about $35,000. And that doesn't count the cost of the flight. Take a look.
NASA is opening the International Space Station to commercial opportunities and marketing these opportunities as we've never done before. We're announcing the ability for private astronauts to visit the space station on U.S. vehicles and for companies to engage in commercial profit-making activities on the station.
Who knows, space travel could just become the norm in the next few years. But for now, let me tell you about the stories you'll find if you look up the website bloombergquint.com. First up, the Securities and Exchange Board of India has proposed an informant mechanism to tackle insider trading cases where genuine whistleblowers could get a monetary reward of 1 crore rupees as well as amnesty from regulatory action. And banks will now provide checkbooks and other facilities to basic account holders, with the Reserve Bank of India relaxing the norms for no-frills accounts. Earlier, additional facilities made these bank accounts just like regular savings accounts, thus attracting the requirement of maintaining minimum balance and other charges. All right, that's all you need to know going to trade today. Do stay tuned though, there's a lot more coming up in just a short while. This is Bloomberg Quint.